In this video, we'll explore some of the customization functions in Global CFO. Notice here in the header on our website it says, what if you were able to predict the future? Well, now you can, introducing Global CFO. Well, this is the section where that happens. So notice that we're in the forecasting section and the pro forma income statement. Unlike the original income statement, which shows just our historical data, 2009 through 2013, the pro forma projects from the next year through the next 5 years. So it automatically creates the pro forma statement based on straight line projections. That's assuming if nothing else changes and we have these same trends, then this is what it will look like. But of course we know that market conditions change or operational conditions change, and therefore our expenses or revenues may change. So here on the left side, unlike the standard income statement, we have checkboxes where this flag comes up, Customize Assumptions. If I click on that box, you'll notice that it shows me our current growth rate is 4, 1 year was 5, and then 4% flat growth rate for the next 5 years. Let's say we're going to introduce a new product. We can change that. Let's say I want to say it's 6%. And I could do that with every one of these going forward. Or I can simply enter dollar amounts if that's easier. And I hit OK. When I hit OK, the numbers change. And if I were to add, for example, 6, 7, 8, 9, and 10%, you would see that rather than the income being fairly flat, in fact, let me demonstrate that for you. Let's just add these. There's 7%. So you noticed before that the income was fairly flat, but I'm projecting some pretty significant growth because of some exciting new things we're doing. So I'll hit OK. And notice what happens to the income. It goes from 51 to 55 to 59, 64, and 71 based on those projections. So I can literally create what-if scenarios that enable me to look at what the future might look like based on changes that I make in my company. Let's look at some other examples. Let's say we want to reduce the amount of inventory we have and increase our inventory turns. I can bring up the customization window. I can put in what I think I might be able to do, and then those numbers will change. And all of this is reflected in the bottom line. Could look at salaries and wages. In this case, there was no history under the operating expenses. We chose instead to put salaries and wages under the general or administrative section. And so I can click on the Customize Assumptions button. I can add employees based on how much we're going to pay in salaries and benefits, and that will show me the impact on the bottom line. And the same thing with payables and all of the other factors that we have in our expenses. We can customize all of those things. So why is that important? Well, first of all, it shows us in real time what the potential impact of our decisions will be. And we can create these what-if scenarios to say, what if we did this? Or what if we did that? What if we made an improvement here? And it helps us to understand where our weak areas are and where we most need to create improvement. Secondly, all of this information translates forward. So these same features exist in the balance sheet, and when these two sheets are completed, then those results show up in the pro forma cash flows. Go over to here, and we can tell what that change will do to our cash flow. We'll know in any given year if we're going to have to borrow money or not borrow money, and everything's going to be okay. Another place that it affects is the business valuation. Now, this is an approximation based on the 3 most common methods for valuing businesses. This doesn't take into account goodwill and other factors that are important in a professional business valuation. This is simply a baseline for us to compare year to year. And so we put in our assumptions based on what is typical for our type of business in our market. And right now it's showing $114 million in value. If I go back to gross sales and I eliminate those growth assumptions, then I can go back to business valuation and notice that that remains the same. but as we move through the other calculations, that begins to change. So it's a very important tool to be able to see if we make certain changes, what will the impact be on our bottom line going forward. So just to sum up, the global CFO feature in forecasting creates automatically a pro forma, which is very useful for any financial officer or any accountant who is evaluating and becoming more of an advisor to their clients. This is useful to say, if you keep going the way you are, this is what the future looks like for you. So we need to maybe make some changes. We make those changes, and then we can see what changes will impact on the bottom line. So I'm going to go back up here. Sorry if this makes you dizzy. Gross sales. I'm going to leave those same assumptions in. I'll hit OK. And then when I go down to the bottom, showing net income, the net income has changed based on those numbers. Remember, these are projections, so I can take any line item that's in here, customize it based on what I think will happen or what I want to have happen, and see what the impact will be, which enables me to make very powerful financial management decisions going forward and puts me in a position where I not only have a predictor, but I have a way to understand what those predictions will accomplish with my company, thus putting me in a very good position to manage my company more effectively.